Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a filing from Goldman Sachs Private Credit Corporation. It's not quite as thrilling as finding a $20 bill in your old jeans, but stick with me, there's some interesting stuff in here regarding unregistered shares, distributions, and returns. Basically, this is a Form 8K, which is like an oops, we need to tell the SEC something important report. This particular one is dated February 20, 2025, so it is looking back a bit. First up, let's talk about some shares that were sold without being registered. That means Goldman Sachs Private Credit Corp didn't go through the usual process of registering these shares with the Securities and Exchange Commission, the SEC. As of February 1, 2025, the company sold a bunch of what they call Class I shares, but the number became official February 20. These shares weren't registered with the SEC, meaning they didn't follow all the usual rules for selling stock to the public. The company says they were allowed to do this because of some exceptions in the law. So how many shares are we talking about? About 15 million Class I shares, which sold for about $378 million. The company says these sales were okay because the people buying the shares were either rich enough to qualify as accredited investors, think high net worth, or were not U.S. residents under Regulation S. Basically, these buyers were considered sophisticated enough to understand the risks or were outside of the U.S. rules. Next, let's discuss the dividends or distributions the company paid out. This falls under something called Regulation FD disclosure, FD meaning fair disclosure, which just means everyone should get important info at the same time, not just a select few. The company announced a regular distribution, basically a payment, for each share for January 2024. For the Class I shares, it was about 20 cents a share. If you took that amount and multiplied it to get a yearly number, and then divided that by the share price, you would get a yield of 9.5%. That's how much they are making compared to what the shares are worth. The payment was scheduled around February 27, 2025, to shareholders who own the stock at the end of January 2025. People could take the payment in cash or reinvest it to buy more shares. Now, what about how well the company performed? They mentioned the total return based on NAV. NAV means net asset value, which is basically the value of all the company's assets minus its debts divided by the number of shares. So this is how much each share is really worth. Total return means how much money you would have made, including any dividends or distributions if you own the shares. For Class I shares, the total return based on NAV was a gain of 0.8% for January 2025. Looking at a longer time frame, it was 2.4% for the last 3 months. Zooming out even further, the return was 10.5% for the past year and 10.9% since the company started operations. Just keep in mind that past performance doesn't guarantee future results. Moving on, let's talk about the company's overall value. This falls under other events, which is kind of a catch-all for anything else they want to tell investors. As of January 31, 2025, the company's NAV, or net asset value, was about $5.5 billion. That breaks down to $25.22 per Class I share. This is important because it gives you an idea of what each share is actually worth, according to the company's calculations. The fair value of all their investments was around $7.9 billion. Now let's talk about leverage. Leverage is like using borrowed money to invest. It can increase your returns, but also increase your risks if things go badly. The company's fund leverage was 0.4x. This means the amount of debt they have is 40% of their assets. This means for every dollar of assets they owe 40 cents. Okay, that's the filing in a nutshell. But what does it all mean? Let's break it down. Goldman Sachs Private Credit Corp is playing in the world of private credit, which basically means lending money to companies that can't easily get loans from banks. They seem to be doing okay, with decent returns and a fairly conservative amount of debt. The unregistered share sales are not out of the ordinary. They have to follow Regulation D to make sure that they're only selling to qualified investors, such as accredited ones. The dividend yield is pretty attractive, but it's important to remember that dividends can change. Here's my take. This company is clearly generating solid returns. The private credit market can be risky, especially if the economy slows down. The fund leverage is a little on the low side and could be a little higher, but it may signify that they are more careful when they do give out loans. Based on their current performance and the risks involved in private credit, I'd say a reasonable price range would be somewhere between $24 and $27. Overall, I'm leaning towards cautiously optimistic about Goldman Sachs Private Credit Corp. While there are risks involved, they seem to be managing things well and generating decent returns for their investors. But remember, always do your own research and don't just take my word for it. Thanks for watching. If you found this helpful, please like and subscribe for more corporate decoding.